Uh, One thing which is very interesting is India is the only country where hydro is segregated as small hydro and large hydro. Well, small hydro is categorized as renewables, which is up to 25 megawatt capacity. Actually, from the wind sector, we are very happy because by having that, wind becomes the largest player for renewables in India. If hydro was added to it, we can never compete it. Uh, okay, coming back to the serious note. Uh, uh, Wind essentially has been the fastest growing resource across the world. The last calendar year itself, the global market size of wind was close to 60 to 70 billion dollars. India was in the range of about 5 to 6 billion dollars. So, well, 10% of that, but sizable enough. And today, with about 14,000 megawatts of installed capacity of wind, as on March 2011, that's the end of the financial year, India was the fifth largest country in the world for wind energy utilization. First, obviously, no guesses, it's China. Uh, and India has been steadily putting up more and more wind capacities across the year, very steadily. And we have a CAGR of close to 20 to 23% over the last 6, 7 years. And we hope that the same trend is going to continue in the coming years. So a couple of more stats which I would like to share over here, with about 14,000 megawatts of added capacity. The wind energy in India produces close to 35 billion units per year, which is essentially close to double the nuclear energy generation in kilowatt terms in India. A very interesting fact, but hardly known to a lot of people. And on mind it, 95% of the capacity of wind power in India is from private sector investments, with very few from the government sector. Uh, Balwant talked about the NAPC, the National Action Plan on Climate Change. That's a vision document of the Government of India for renewables, particularly as a mitigation option for climate change. And we have a bold, robust figure of 15% targets by 2020. If one was to assume that this 15% target was really implementable, we're talking about close to 100,000 megawatts of capacity additions over the next decade. Uh, with 14,000 megawatt of wind today in India, represents close to 70% of the total renewables capacity. The total renewables capacity in India is about 18,000 megawatts. And if the same trend is going to continue, maybe at a 50% level, we're talking about a market size of close to 50 gigawatt of wind in India over the next decade, which is a sizable one. If you convert that into investment term, it's close to 3 lakh crore rupees. With a 70-30 debt equity ratio, you know where the opportunities lie, both on the debt as well as equity, and maybe also some mezzanine capital coming in. Last year, India added 22,300 megawatt, which is close to 14,000 crores of investments, close to $5 billion. And this year, the industry is expecting a rise of about 700, 800 megawatts. That's about going more than 3 gigawatt of installed in the current financial year. So it is growing, and that would mean an investment size of almost close to 15 to 16,000 crores, or something like $7 billion. This is going to go ahead in the future. Little bit on the business models on which these entire investments are happening in India. There are 4 business models which are there today, as an offtake arrangement, to be precise. Dr. Mishra talked about the preferential tariff mechanism, which is prevalent in Gujarat, which is prevalent in most of the states in India. So that's one particular investment model that a lot of investments happen into. The second investment option is going for a captive utilization. If you're an industry or a commercial consumer, you can put up a wind farm project or any renewable project and have a captive utilization of electricity. There are people who do that. The merchant market, open access transactions. Certain states, it is viable to do open access transactions in wind power, intrastate, I mean to say. So there are market models for that. And the latest model which is out is the market-based, instrument-based model, which is the RE certificate trading, where all across the India today, 24 states have RPO targets. And in order to meet their targets, unfortunately, renewables are not in the same manner placed in India. It is site-specific. So particularly a state like Delhi, which is a city state, if it's got an RPO target, where does it get its renewables from? So either it buys renewables electricity, which may be quite cumbersome because of open access regulations. The other option is it can buy RE certificates, the renewable energy certificates, that will be generated by a particular generator in one of the part of India, and you buy the certificate for compliance purpose. The logic is very simple, that renewables is a national goal. So finally, renewables are getting added, and you are able to comply by buying certificates from other states. This is a very new mechanism which has been launched about less than a year back, and you had 6 trading sessions of RE certificates in India, and the results have been very promising. A RE certificate is equivalent to 1,000 units of electricity coming from renewables. So one REC is 1,000 units. And if you convert it into dollar term, it's a regulated market. The Central Commission has fixed a floor price and a forbearance price in which a trading happens. The floor price is fixed at $33 per REC, while a forbearance at $73 per REC. It's a very crude way of internal trading mechanism that we have in India, not essentially in mirror like CDM, but something very crude. And the first trading session that was in March 2011, the trading volume was about 400 RECs because there are very few RECs available in the market. And the trading volume was, in terms of rupee equivalent, was 16 lakh rupees. In the sixth trading session, which happened in the early part of this month itself, the volume was 25,000 units of RECs, and the trade volume was close to 5 crore rupees. So that's the growth of RECs that is happening, and more so, the last trading volume price was at $39 per REC. So there has been a very great acceptance of this mechanism, which is going to go forward. So you have these 4 different mechanisms available. Finally, what I would like to say is that there are opportunities, but there are challenges also in terms of transmission, because huge projects will come in. You require a fair amount of investment in transmission, logistics, non-recourse project financing, and so these are challenges which can be converted to investment opportunities for people who would like to look at. And finally, of all the list, I don't know if anybody talked about it in the panel or in the sessions, was the onset of the goods and services tax in India in the next year, which is going to come in. This may change a fair amount of basic structure of the power sector and also the direct tax code. So this is also going to be something very new to India, and we'll have to see how these challenges would be incorporated by the industry at large. Thank you.